access to finance, and what I want to focus on is, helping you to understand, how to actually get money. Funding is the lifeblood of any business, and what people don't realize is that there are actually things you need to do in order for you to attract funding. Some entrepreneurs believe that once they have an idea, and once you sit in front of somebody and you just tell the person the idea, the person must be stupid not to give you money, right? But there are other things that the person sitting on the other side will tell you, and because that's what I do for a living, this is what they pay me salary for, to listen to people tell me their ideas, and I decide whether I want to give them money or not. So what I'm going to do today is to try and help you see the things that you need to focus on, both when you are coming to me and what you need to do in your business in order for you to be able to get the financing that you need. So I'm going to cover it in four main areas. First of all, I'm going to talk about the importance of cash. And then I will talk about the different types of commercial capital that are available. And then I'll probably cover sources of capital. Where can you find this money, or how can you find this money? And then one of the important parts for me is what I will give you a few tips on what financiers are actually looking out for, so that you can, organize yourself in that manner. So first of all, when we look at a company, there are several things that surround this concept of what we call a company. And what I want to focus on is to focus how cash moves, or how money moves, in and out of this thing we call a company. So think of your business. First of all is you as the entrepreneur. Now, as the entrepreneur, you put in what we call capital into the business, and sometimes it may be cash as capital, sometimes it may be just the effort and the things that you put down to get the business going. And also you look for investors or other people to bring in money into this company, including banks, or it could be somebody like me or whoever it is that wants to put money into the business. And the person that puts money in is expecting a return. So there's cash that goes in and is expecting cash out, right? Which is what we call a return. But there are also other players like your suppliers. And your suppliers, for example, what they do is they provide materials and services to the company, and you do what? You pay them. You also have your employees and contractors that give you provide skills and services, and then you also pay them. So they give you something that is not monetary in value, but you exchange that value that they give you for cash. So cash is coming out. Same thing with the suppliers. They give you something, and then cash goes out. And then you also have the government, who provides an enabling environment for you to function in, and then you pay them also in some form or the other, taxes, and by creating employment. And then lastly, you have your customers. And your customers, you provide them your products and your services, and then they also make a payment. The first thing I want you to know is that cash is king. There's nothing more important for your business than cash. Because the whole oil of what makes that company function is your ability to manage your cash. If you are weak in how you manage your cash, the business is dead. The second thing I want to point out is, in order for you to generate cash, you need to create value. For somebody to give you money, to fund your business, to put money in your business, you have to show the person that you can create value. And this is one of the first points I'm going to touch on when we look at the points that financiers are looking for. And that point is, to raise money, you have to demonstrate that you will create value. So if you come to me as an investor, the first thing I want to see is your ability to create value. And for us as entrepreneurs, that should be, if you want to generate cash, create value. Money will not drop from the sky just because you have some kind of super idea. Does not necessarily mean that you must demonstrate that idea will create value. Your focus must be on what value am I creating. Your ability to demonstrate to a financier that you can create value is the key to your generating cash. So the second thing I want to talk about is types of commercial capital, and they are generally broadly, three types, and I'm saying broadly. One is what we call debt. The other is what we call equity. And in between debt and equity, there are several things. And we'll touch on a couple of that. So in one extreme, you have what is called debt. On the other extreme, you have what is called equity. And in between, there are different types of capital. So debt is a legal obligation to repay amounts that are borrowed. So anytime you say you want a loan, the important thing you need to know is that it is an obligation that is legal by you, saying that you will return the money that is borrowed plus an interest, right? So there's a cost to that money. You know, the way I always like to see it is that if somebody, it's like you are buying the money. You say, I need $10,000. I have $10,000, you need $10,000. You demonstrate to me that you can create value with the $10,000 I give you. I will put a price on my $10,000. So I'm selling my $10,000 to you for X amount. That X amount is what we call the interest rate, right? So that interest rate is the $10,000 plus the interest rate is what you will pay me back at the end of the period after I've given you the money. That's what a loan is. But most people fail to understand that it's a legal obligation. And it has a maturity date. So there is a date in time when you are obligated to return the money that I give you back. Now, if you understand that concept, you understand a few things. And if you get what I'm going to talk about next, you understand why it has been difficult for a lot of people to get money from banks and why you can make it a whole lot easier, subject to some other things, for you to get money from banks. Right? In banking, they teach what is called the 5 C's. So usually, if you are going to somebody, to a bank, to collect a loan, there are 5 things they are looking out for. And if you meet those 5 things, subject to other things as well on the part of the bank, ideally you should get the money. So these are the things we were taught when I was a banker. As a young banker, they taught us the 5 C's. One of the 5 C's is what is called capacity. So one of the things, the person who is providing you that, and it may not even be a bank, even if you came to me and you said you wanted a loan, these are the things I'll look out for. Number one is capacity. Write it down. Capacity simply means, does this business have the ability to generate cash? Does it have capacity to return the money that I am giving him with the price that I've put on my money? So it means before you go to the banker, one of the things you need to do is to sit down and check if you have the capacity, or if the business has the capacity to take the money. And what the banker is looking at is what? Cash flows. Nothing but cash. He's not interested in how much, profit you are. He wants to see what cash will come out, because it is that cash you will use to repay the money he's giving you. So you must sit down and do your homework and be sure that you have, your business has enough capacity to take the loan. The second thing they look out for is capital. Now, usually most people, especially entrepreneurs at this stage, don't have too much of this problem, even though you don't, because what they want to see is that you are committed. If this business fails, you also fail. So they want to see what capital have you put into the business. What part of your own money or what part of your own life is at risk if this business fails? The other thing they look at is collateral, and this is where, a lot of entrepreneurs have an issue. And collateral is like a form of insurance for the banker. They want to see that if all else fails, and you refuse to pay, that they have this thing that they can go back to get payment back from. And I know that in SME lending, they don't focus mainly on, they look at various forms of collateral, and we can talk about that later, but I won't do that because of time. The other thing is conditions. They look at the conditions of the facility that they are going to give to you. So how long? What's the tenor? What interest? So even you, as you are going to the lender, whoever is going to provide you debt, you need to have these things clear in your mind. I need $10,000 which I will pay over a period of 3 years. And every year or every month, I will pay X amount. And after I pay X amount every month, after the end of 3 years, I would have returned your $10,000 plus the interest rate. You need to have a sense of that condition, and so that you know what you're coming to ask for. Because if you came to me and you didn't have any clarity in terms of how you are going to borrow that money, after you've looked at your capacity, chances that I will give you that money is low. And then the last one is character. And character for me, especially if you're not, for me as an equity investor, is probably one of the most important things. Because when I look at a business, ultimately, when you give money, you are giving money to people, to an individual. And the ability of that individual to manage that money is probably the most important thing for the person who is parting with that cash. And the only way I can test that is by looking at your character. And you know, character is very difficult to judge because it's subjective. But there are certain things that banks look out for to confirm that character. Number one, does this person have a track record of taking money and returning it? They look at your account and see, have you had a situation where you have checks that have bounced? They try to find out and see whether you pay your bills or not. You know, one of the reasons why they ask for utility bills and all of that when you open an account is part of to check character. Is to identify who is this person, where is this person from, what has this person done. So your ability to demonstrate character is also key whenever you're looking for debt financing.